Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of Bitcoin miners. And so the reason why we're looking at Bitcoin miners is because CleanSpark releases their earnings as well as Marathon Digital. And so CleanSpark will be beginning their earnings call in about half an hour. We'll be tuning into that for the first half an hour of it before switching over to the Marathon Digital earnings call at 5 p.m. Eastern. And we'll be sticking around for the Q&A for that one, so should be pretty interesting. I am excited to learn more about how the Bitcoin halving has affected the miners and just to learn more about the companies. I personally am not invested in either one, but I do stack Bitcoin as well as some other cryptocurrencies. And so I'm just excited to learn more about these. And so I should start by saying, CleanSpark, ticker symbol CLSK, closed at a price of $16.59 on the day, being up about 1.3% over the course of the day and going up a little bit more in the after hours, while Marathon Digital closed at $19.65, being down a little over 2% on the day and continuing a little bit lower in the after hours. And so we're just going to have to see where these stocks go. And so I'm excited about that. And there's been some other exciting stuff going on with the markets. Looks like GameStop might be doing another squeeze going into tomorrow maybe. So that's pretty exciting. And I did a little bit of a plug trade that I could have been more, conservative with it, a little more aggressive with the covered call and stuff that I did. But either way, we'll end up in profit, so I feel good about that. It expires tomorrow. And somebody did request that I go over TeraWulf. Haven't really done too much with it, just have this Fibonacci right here. But it is up 1.29% on the day, closing at a price of $2.36. I think, what happens with CleanSpark and Mara, I think that will have a pretty interesting effect on the other Bitcoin miners, so we will have to see. And I am all set up for the CleanSpark earnings call. They usually start the call just playing music for the first 15 minutes leading up to the call, and so I'll plug myself into that when the time comes, and then I'll get you guys plugged in once the call starts. And and also I should note that I do live streams every Sunday at 9 p.m. Eastern, doing ticker requests live. So you guys request tickers, I go over the charts live. It can be a lot of fun. So if you're interested in that, I believe I've done it every single Sunday so far in 2024. Eventually there will be a Sunday where I can't do it. That's one of the fun things about the channel, and it helps me to get to know other charts and also gets me to think about levels and whatnot on the fly. So it's pretty fun. And if you do enjoy the content, make sure you like it. Make sure you subscribe, whether it's earnings calls, Bitcoin miners, or just general technical analysis. I have a lot of fun doing this, and I enjoy the comments from you guys. So always make sure you share your thoughts, whether that's in the comments down below or in the live chat when doing streams. Happy to hear from you guys. And also, from the top, I am on Twitter or X, dgen_Ann. I am Andy. That is Ed over there. And I also just started a Discord that I'm not terribly active on it, but there are a number of people sharing lots of ideas on it. So if you guys are interested in Discord, you can go over there. We will have to see. It looks like I'm going to actually have to switch over to the minute time frame because this is an earnings call, an earnings stream, and stuff gets volatile around them. Looks like up about 2.5%, about 2% in the after hours. And I'm going to adjust what you guys are seeing a little bit rather than seeing my display. I'll adjust you to Webull, and then I will add Chrome, the web browser, for the earnings call when that begins. But I'm just actually going to go over and check on their website to make sure that we are all set for it. And I hope you guys are all having a good day trading. It's been a pretty busy one for me with all these earnings calls. I also had to go into work for an hour. And Yeah. Natural gas. I've had a position in ticker symbol UNG, United States Natural Gas, for a while, and I was thinking about trimming it. I closed it. I might regret it because it might rally more, but I lowered the risk there because I do think there's going to be a pullback with natural gas, and I'll be reestablishing that position down there. So, anyways, that happened with me today. But let's see. Yeah, so this is the CleanSpark chart going up, coming back down a little bit. And yeah, lots of indecision. And I actually, ooh, yeah. So, we're going to have to see what's going on with these guys. And I do have Bitcoin on the chart as well, or on the side here. So we can kind of see what's going on with that. I think that we're going to see another rally with it. I think we always, tend to see kind of fake out breakdowns. And so, yeah, both CleanSpark and Marathon are about 2% up in the after hours. Looking pretty good here. Going past this level that I have marked. Let's see, what's that level marked at? Yeah, so going up, it looks like we just formed a bull flag, and we're breaking out of it. So looking pretty good over here for Mara. CleanSpark, not as strong. This actually looks like, it doesn't really look like a bear flags. It's down and then consolidation, but that went up, down. Yeah, so it's a little peculiar. They kind of have similar shapes, but Mara just looks much stronger, especially being above these highs here, above 20 in the after hours. CleanSpark is, green in the after hours, green on the day, but overall not as good of a performer as Mara. So we'll have to see what happens with him. And I am going to, let's see, I've got the, hey Greg, what's up? After the halving, Bitcoin goes up 2 months later. I understand that has been the history. Yeah. So I know that it I definitely think price of Bitcoin is going to be going up, but I wonder how the ETF and all of that, because the ETF was announced. Thanks, Greg. Glad to have you here. With the ETF, I feel like that kind of created some hype before the halving, and so I wonder how that's thrown it off. But yeah, long term, Bitcoin, that's basically my retirement. That's what I'm going into. So yeah, and before with I've traded a little bit of Marathon and CleanSpark. I don't have positions now, and by that I mean I traded a while ago, haven't recently. But yeah, it's I learned through really the past couple cycles what my risk tolerance is for Bitcoin. It's just really slow, weekly buys, and yeah, I don't understand how you cannot be bullish on the crypto sector in general, especially around Bitcoin and miners. It's a no-brainer. Whether it's energy, whether it's currency, money, wealth storage, I think they're great. And so yeah, Marathon going up and down. I'm going to switch back over to the minute time frame. Yeah, just kind of zigzagging around. I feel like they probably released their earnings reports, and so I need to check those. Hey Marvin, what's up? Good evening. CleanSpark starts in 22 minutes and Mara 30 minutes after. Yeah, CleanSpark goes first, and usually from what I've experienced on calls, it's the CEO and CFO talking for about half an hour, and then they give the mic over to Q&A from journalists, from whatever, Wall Street Journal, banks, whoever wants to ask them questions, investors, and I guess not necessarily investors, but firms, and so we're going to miss the Q&A basically for CleanSpark, but we'll be tuned in for the whole thing of Marathon. Number one, so their market cap 5.36 billion, CleanSpark's 3.74. So yeah, I think Marathon just being a larger company and also just has a little bit more of a following as well, and either way, we'll just be getting a lot of information on miners, on Bitcoin, and 1 to 2. Sorry, I'm not sure what that means, but yeah, we'll have to see. I don't know if that's percent or what, but yeah, we'll It's going to be a pretty dynamic after hours. Oh, 1 to 2 months after. Yeah. Yeah. So, I mean, I just think that, like, from what I've experienced, like the last, like, big peaks, I've experienced Bitcoin. I didn't necessarily, like, last time I bought the top, the time before, yeah, basically did it again, or initially, but just learning a lot about them, and those were always around the holidays, Thanksgiving, Christmas, New Year's, and so I'm wondering if Bitcoin might be rallying up towards the end of the year, and yeah, so I'm very excited for the year of 2024. I think it's going to be a good one. And so Q&A at CleanSpark is them answering their own questions anyways, so smart choice. And I have CleanSpark, Riot, and Mara. Sounds like you've got you've kind of got like the ETF for Bitcoin miners. Hey, what's up, Ben? How's it going? And I imagine, if you're curious, I'll throw it up here, but I don't know I'll be able to spend too much time on the chart. Put Blink up here. Let's see. Oh, going up 5% in the after hours there. So that's looking good. Yeah, it's crazy because to me this looked like it was like a bear flag, but we'll have to see where it ends up. I feel like it'd be a really good retest of either this downtrend or these lines over here, um, but yeah, we'll have to see. And let's see. I'll get back over to Mara and CleanSpark. Hey, what's up, Egal? Marvin says, used to own a lot of CleanSpark, but I don't like the management team. They lack integrity, lied on a lot of occasions. I don't really know too much about them. I believe I follow the CEO on Twitter. He's always seemed like a pretty friendly guy, but I don't know anything, in all honesty, about any of these companies other than they're, mining Bitcoin and trying to do that cost effectively. And especially after a halving, it's going to be tough. And we are getting close to quarter after the hour, so I might see about plugging myself in and get an idea of the kind of music CleanSpark's playing before their call. Spoiler alert, it's probably bad music, as most earnings calls do have bad music. And so, all right, just plugging myself into the computer. And let's see. Cool. Okay, so it might be a minute more before I can start listening to the pre-call music. Looking at the 1 hour chart here, I feel like look a little more dynamic here with the 1 minute. Yeah, it's a lot of indecision. And I think it's pretty interesting. It's going right in between these two lines that I happen to have drawn there. Don't have them drawn in the same manner with CleanSpark. Yeah. And so, lots of info in the chat, it looks like. So, yes, they seem very friendly, but they used to do microgrids, and they basically made up a whole pipeline and product that didn't exist in hindsight. Blink Charging announces first quarter revenue growth of 73% to 37.6 million and a gross margin of 36% for those of you interested in Blink. And I heard that CleanSpark management was switched recently. Okay. Now it's Matt and Zach. Still, they started mining. So on the contrary. And so Mara's report is out now. It's a huge beat. Awesome. But yeah, it's always interesting, just because there's a beat or even a loss. Charts can respond differently than what you'd expect if it's priced in or something else. And let's see. And so let's see. And no problem if I provided thoughts. I'm just rambling a little bit and reading people's comments. So it might be other people's comments that I'm reading, not my thoughts. 165 million revenue, 223% increase. Can you say something about Dual, please? I will probably add them to the request list. I haven't responded to comments yet, sorry. I will probably add them to the request list for Sunday. And I think that they did just release earnings, didn't they? They did, I believe, yesterday. Yeah, and so it might be good to see how like the chart responds over the next couple of days. It does seem like, I mean, I could see, just doing this real quick, I could see that having hit support, and with that being respected, that could be a bottom. That a bottom was hit today around $194. And actually, what was the low for the day? 192.22. So pretty good there. And so maybe that gets a bounce up. And actually, I'll do this real quick. I'm sorry for those who want to see the CleanSpark stuff, but let's see. Go from the bottom there to the top here. It would have been nice if it closed above the 618, so I could actually see it fading down to the 786 around $189. But, you know, maybe also that it's found support here. Volume profile, I don't know. It's kind of tough. But I'll definitely include that in the, I'll put that on the request list for Sunday's stream. And so I can definitely go over it then. But now I think I'm going to get myself plugged in and get ready for the CleanSpark call. And we can see Mara on the left there. And so I may not be able to respond to all of the live chat right now, but you guys read that. Keep yourselves engaged with each other. I'll try to catch up. Okay. And so I've got to adjust what's going on there. And let's see. All right, yeah, I got some music, so I will be made aware of what's going on, and I'm going to adjust the frame so we can actually see the CleanSpark logo. Let's see, how am I going to do this? I probably won't be able to fit their little icon on here, but I'll at least get there. Gotta shrink this a lot. Let's see. Sorry, just getting this set up. Hopefully this looks all right. And so now you know where you're at. CleanSpark right now, and they'll switch over to Marathon in about 40 minutes is when their call should be starting. And I've got music in my ear, so I know when it's going to start, and I will refresh in about 10 minutes for the CleanSpark earnings call. So I'm just going to try to catch up on the comments yet, and I'll definitely go over Duolingo on Sunday for sure, more in depth than I just did. And then Marvin's writing $1.26 net income per diluted share. I'm not sure which one. I assume that's for Marathon. Random question, is Riot last week? Yes, they had their earnings last week, had an expected earnings of a loss of 14 cents. I assume that's EPS, earnings per share. and it ended up being 81 cents. Why did the stock not go way up? Like that's the funny thing, because sometimes it gets priced in, and it's also like if the common sense move would be for something to go up, Wall Street firms might exploit that by getting basically exploiting the fact of what retail investors, the sheep, I guess you could say, would be doing, and then doing their trade on the opposite side. They've got so much money behind them, they can really drive prices up or down, and so it's part of like the corruption of Wall Street and stuff like that. But yeah, let's see. And what I think will probably happen with these is I imagine that Bitcoin at some point this year, I imagine towards the end of the year, is going to be over 100,000. And these miners will be going up with that. And right now it's just a little bit of a lull because of the halving. So the halving might be like a bigger factor on these companies at this point moving forward, because like as far as the earnings that they report, that's going to be before the halving. Anything that they project, it's going to be factoring in the halving that they're getting half the reward per block mined. And so their outlook's probably not going to be as good as it was for the previous quarters or previous years, because it's been, so many years prior to this halving. So, and then Thomas says, I'm generally bullish in the big miners, but I would assume that the short-term outlook for miners is not that good for getting half reward. Yeah, exactly. And need to wait for Bitcoin to raise to be profitable again. Yeah, so I feel like now is probably like, now is the time where there's some weakness. So I feel like now is kind of like the time to be accumulating, whether it's Bitcoin miners, and by the end of the year, I think that they'll all be worth a lot more. But yeah, I definitely think that like the halving is a hit for the miners. And so when does Mara release? I think they already released the report. I can't be doing too many things at once. And I mean, it might actually be, if I just switch over to here. So highlighted here, Marathon Digital Q1 earnings per share is $1.26. That's pretty good. But price may not reflect that, or price action may not reflect that. People buying or selling the news. And actually below, there's something on Duolingo here. So let's see. However, it did make a nice profit on Snapchat. Nice. Ended up buying in at $11. I don't know where that is at, so I'll have to pull up Snapchat real quick. That looks like after hours flat. I'm just going to flip over to it real quick. The day was down 1%, so not too bad. Marathon Digital now going down a little bit, about 4% in the after hours, whereas CleanSpark is about flat. Wonder if it's going to the 236. Yep. And I made some tea for myself because I'm kind of tired. This will be like me spending 6 hours today on camera talking and rambling about things. Yeah, and I think there might be an ad coming up in a few seconds, but I'll be back in a minute, less than a minute after that. Still about 5 minutes before the CleanSpark call starts, and CleanSpark down about 0.5%, holding up better than Marathon. And actually, I mean, if you think about it, Marathon has been up more, the past few weeks, whereas CleanSpark has pulled back some. So there's more room to the upside for them to run. Whereas, it's like if they're both supposed to be, let's say, around the 236 or the, let's say that level, that's an upside for CleanSpark. Whereas with Marathon, that's to the downside. So, but yeah, I'm very paranoid about waiting for a call to start and it like needing to refresh and just getting like left behind, because that's happened before with, I believe, Fuel Cell, um, where I was like streaming waiting for it to talk. It's like, man, they're like 10 minutes behind schedule. And I just had to refresh the page. So yeah, it's still just music. If I'm bobbing my head, that's because I'm listening to music from their call. And actually, I don't know if I'll be able to. Yeah, let's see. May 9th. CleanSpark reports. So I have CleanSpark's. I'm just going to post it in the description of the video so you guys can have easier access to it. Just needs to load 1 second. Oh, actually, I already posted it for CleanSpark, but I'm going to put the report there now because now that's out. And I will do, let's see, I'll try to do the same thing. Press releases. Yep, so I'll put both of the press releases along with links to the calls in the description of the video, saving it right now so you guys all have access to those files or those reports. And let's see. All right. About 2 minutes to go before the CleanSpark call starts. Still just hearing music, so nothing too crazy. And so, however, I did make a nice profit. Okay, I saw that one. Thomas, in my experience, it depends a lot on the outlook they give. Yeah, exactly. So I feel like the outlook following the halving will probably not be that great for the next quarter, but I think the quarter after that, I think that they're going to have really good outlook. It shows the performance of the mining pools. Snap is at 1674. It had a good month. It's been slow this week, though. Came late. Any updates? Well, I posted the press releases for their earnings in the description of the video, and I've gone over a couple of the stocks that are on the side there. I'll probably do Duolingo on Sunday for the stream, and maybe I'll do Snap as well. Oh, I think the call's starting, so I'm going to mute myself in just a second. So right now it's just music, but it should be starting in just a second. Yep, just music still. Yeah, so it's about a minute, maybe 30 seconds. I don't know. I'll check my phone. It gives me the seconds. Should be the next couple seconds. Should be starting because now it is 4:30. But it is just music right now. I can actually show you the screen if you're curious. This is what I'm waiting for to begin. It does say it's live, but yeah, it's just music. So the operator will start talking in just a minute, I'm sure. It's kind of funny. I think it's the company that hosts these calls, Q4, I believe. They have like the same music to start all the calls. So it's just I don't like I it's such basic music. I don't even know that I get a copyright strike for it, but I don't want to risk it because I got a copyright warning once for a Coinbase earnings call, but it wasn't a strike, so that was good. And so yeah, let's see. Marathon Digital still down about 4%. CleanSpark is flat, man. All right, just waiting for the call to start. Got some music in my ear in case anybody's new joining. I think the call's starting, so I'm going to mute myself. But first, this is the call.
Ladies and gentlemen,
There
good
we go.
afternoon. My
Cool.
name is
All right, I'm going to
Regina,
mute
and I will be
myself.
your
You guys
conference
enjoy.
operator
I'll
today.
put my
I would
thoughts on
like
the
to
chart
welcome
and in the live
everyone to
chat. I hope you
CleanSpark's
enjoy.
second quarter fiscal year 2024 financial results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you'd like to withdraw your question, press star 1 again. I would now like to turn the floor over to Isaac Holyoke, Chief Communications.
Thanks, Regina. Appreciate it. And thank you for joining us today for our second quarter fiscal year financial results call, covering the period January 1st, 2024 through March 31st, 2024. Our press release was issued earlier this morning and is available on our website at www.cleanspark.com. Today's call is also being webcast, and a replay and transcript will be available on our website. On the call with me are Zach Bradford, our Chief Executive Officer, and Gary Vecchiarelli, our Chief Financial Officer. Keep in mind that some of the statements we make today are forward-looking and based on our best view of the world and our business as we see them today. The statements and information provided remain subject to the risk factors disclosed in our most recently filed annual report. We will also discuss certain non-GAAP financial measures concerning our performance during today's call. You can find the reconciliation of non-GAAP financial measures in our press release, which is available on our website. And with that, it is my pleasure to turn the call over to Zach.
Thank you, Isaac. We've had an exceptional quarter, made possible by the hard work of the many quarters that preceded it. In fact, this quarter has been, in many ways, the payoff for what has been years of careful, measured, and patient building. But rather than see this as a place where we stop to celebrate, I see this as a beginning in which we have already laid a strong foundation for the future to come. Post-halving, this foundation of grit, commitment, and importantly, the scale we've developed over the last few years will continue to pay off as we work to deliver exceptional returns to our shareholders during the next cycle. Our record-breaking revenue and adjusted EBITDA are a testament to our robust operational strategies and market positioning. We recorded $111.8 million in revenue and $181.8 million in adjusted EBITDA. These numbers are impressive on their own. Compared to the past performance and the speed at which we have achieved them relative to our peers, they become more so. Our revenue grew 52% quarter over quarter and 163% compared to the same prior year period. Adjusted EBITDA grew 163% quarter over quarter and then 12 times over the same prior year period. Bitcoin production, despite global hash rate growth, stayed strong, even beating our prior quarter's production, placing us amongst the highest producers in the industry. Since the start of 2024, we've experienced exceptional growth, with our operating capacity increasing by an impressive 63%, in what we believe is the most hash rate added amongst any public miner. Our growth is supported by our newest Bitcoin mining facilities in Mississippi and Georgia. And as we announced, moments before the call started, we plan to continue our growth in the great state of Wyoming, which I'll discuss in greater detail later in the call. I want to pause a moment here to underscore how important our growth has been. We've had a lot of talk lately about the programmed halving and its impact on miner revenue. What ran under the radar is the fact that we experienced a halving of sorts already with global hash rate's dramatic rise, and even given that rise, we still have grown our production, outpacing global hash rate, while some of our peers have languished. We expect to do the same with the programmed halving that recently occurred. Among the evidence for this claim is that we've achieved a significant milestone, securing our position as the second largest vertically integrated, publicly traded Bitcoin mining company in North America. Our current total capacity stands at over 17 exahash per second, distributed across 8 owned and operated data centers in Georgia and Mississippi, and co-location facilities in upstate New York, and we are not resting on our laurels. Our efficiency is amongst the best globally, emphasizing our commitment to innovation and operational excellence. Efficiency is a crucial metric in every aspect of our business, including our fleet, operations, and capital allocation. With capital on hand, we have fully funded all machine purchases. This positions us to continue to thrive post-halving and be highly active in the coming months. We expect to be one of the most measured and active acquirers in the industry. Speaking of machine purchases, we aggressively pursued machine purchases upgrades, notably the acquisition of the S21 Pro miners, enhancing our mining capabilities significantly. We recently took advantage of an opportunity to upgrade our purchase of the already efficient S21 to the new, even more efficient S21 Pros at the same industry-low cost per terahash. The effect of this upgrade is a 17% increase in our total purchased hash rate, adding 3.4 exahash per second. These machines are so efficient that we don't need to add more infrastructure to achieve and recognize these hash rate gains. These new rigs represent the latest advancements in mining technology, setting the stage for our continued success. Our shareholder returns this quarter have been impressive, reflecting our strong financial health and our commitment to shareholder value. Year to date, we have outpaced all our publicly held peers to become the second largest miner by market cap listed on the NASDAQ. Many of these achievements can be tied back to the benefits of scale. I want to drive this home as I think the benefits of scale are grossly overlooked. Many try and find a single metric that levels the playing field between small and large miners, but the playing field isn't level. A company that has scale can achieve escape velocity with much lower incremental inputs. Consider this. Because we have our scale, we can cover all of our overhead costs with the margins from our Bitcoin production, and as a result, all new capacity we add and the resulting Bitcoin goes directly to our bottom line. No matter how you slice it, no argument about unit economics matters until scale and the resulting escape velocity is reached. You pair this scale with our solid cash balance, minimal debt, and our significant cash flows, we are set to grow at a lower cost of capital, faster, and stronger than many of our peers. I continue to believe that we will have fewer public miners at the end of this year than we started with. The miners that have not reached the escape velocity of scale, lacking the ability to cover all their overhead costs by Bitcoin production, will be pulled back down to earth. Now, this also creates opportunities for CleanSpark, which we intend to continue to capitalize on in our journey to 50 exahash per second and beyond. Building upon our scale, our unique advantage also lies in our deep understanding of infrastructure needs and the ability to control our own destiny. Being a vertically integrated company, or said in another way, asset heavy, from the outset, we have always recognized the value that this control provides us as we navigate halving and other market events. There are a lot of variables out of our control, such as Bitcoin price, global hash rate, machine prices, and ultimately, energy prices. Our strategic approach sets us apart in an industry where variables are constantly changing, allowing us to produce the best results. I also want to mention the value of holding Bitcoin. Our operations produce strong positive cash flows, and we've been using those cash flows over the past several months to hold Bitcoin. Or said another way, we have used it to buy Bitcoin at a price less than spot. We view our cost of production as a measure equal to a purchase price. And our low cost of production has allowed us to not only grow our treasury dramatically, but also benefit our shareholders through the recent and future price appreciation. We believe setting ourselves up to benefit from the future appreciation is an important strategy, as it's the easiest way to pave the way towards a large amount of non-dilutive capital for our shareholders in the future. To do this, we have prioritized the use of equity in our growth because it's the right way to build long-term value. We've successfully turned equity capital into assets that have provided our long-term shareholders with a significant return on capital. We also believe that Bitcoin will play an important role on not just our balance sheet, but the growing of adoption of Bitcoin on others' balance sheets will continue to lead to increased value in the future. Gary will speak more about this later. Of course, a lot has happened since the quarter ended. Principally, Bitcoin's price action as well as the halving. The recent Bitcoin halving is a pivotal event for the entire industry. For those unfamiliar, Bitcoin halving is a scheduled reduction in the reward that Bitcoin miners receive for adding new blocks to the blockchain. It occurs approximately every 4 years, effectively halving the number of new Bitcoins created and earned by miners before transaction fees. It's crucial to understand what that means for CleanSpark. Halving has the impact of compressing margins, which means only the most efficient miners can support profitable operations after the halving and prior to any meaningful price appreciation of Bitcoin. For some miners, it is a halving. For some miners, it's an offing. And for other miners like CleanSpark, it's an opportunity. It is an opportunity because the reduction in Bitcoin rewards is partially offset by changes in the hash rate across the network, which takes time. But we've begun to see decreases. Miners with efficient and profitable operations can take advantage of this decrease in hash rate as they organically grow their market share. Then as Bitcoin's price appreciates, this halving adjustment can benefit those who are efficient enough to operate through the difficult times. But I want to zoom in a little on this. The opportunity for CleanSpark isn't just in the amount of hash rate that drops off, but in the data centers that become available as a result. It's easy to get lost thinking about the sheer size of global hash rate. But consider this. We're about 3% of the global network. That means that the most recent decreases in the network hash rate of about 15% means data center space equal to approximately 5 times the size of our company has become available, that we can then optimize and upgrade at a multiple with our superior operations if we choose to acquire it. This represents the potential size of the opportunity for turnkey growth, in addition to the organic growth plans we already have. At CleanSpark, we are navigating this new era with our characteristic discipline and focus on returning value to our shareholders. We've built and maintained our strength through advanced strategic planning and active power management at our operations. For example, in addition to actively managing our power, we continually optimize our operations through hardware and software improvements to keep the cost of mining, or hash cost, below the revenue generated per hash, or hash price, ensuring profitability despite market fluctuations. We see hash costs becoming an increasingly important and easy to digest variable for shareholders to use when they are evaluating publicly traded miners. Hash cost considers primarily fleet efficiency and power cost to deliver a more standardized metric. And of course, the best power prices and the most efficient fleets are meaningless if the operator cannot maintain exceptional uptime across their portfolio. Our existing data centers have performed exceptionally well, each designed to maximize output and efficiency. What that means is that we have an industry-leading hash cost and a track record of effectively managing that cost. Our internal analysis places our current hash cost around $32. We're not just expanding our fleet with additional machines, we're also upgrading existing equipment. Our recent exercise of the option for 100,000 S21 Pro miners is a testament to this approach and aligns with our long-term strategic goals. Importantly, it will exert significant downward pressure on our hash cost, giving us an expected hash cost as low as just under $28 once the S21 Pros we have ordered have arrived and are deployed. Compare that to the hash price, which as of this call is around $50. We expect to see continued hash price improvement, but in the interim, we see current hash price as a meaningful correction in a very crowded market while we wait for the continued price appreciation. Although hash price is a good measure, we think it's ever more important to consider the all-in hash cost, or said another way, the all-in cash cost to operate the business, including overhead, to produce hash rate. I will repeat what I said earlier. A company must be capable of covering its cost with its production post-halving to achieve escape velocity. And miners lacking scale or with less efficient corporate overhead practices will never beat miners operating at large scale that cover these costs without requiring outside capital inputs. In summary, as we move forward in this new phase of Bitcoin's life cycle, CleanSpark is exceptionally well positioned to continue thriving. Our proactive strategies and relentless pursuit of operational excellence are key differentiators that set us apart in this competitive landscape. We've grown tremendously over the quarter and over the last year, and we plan to continue to grow. As of this time last year, we were operating at 6.7 exahash per second, meaning we've grown at an annual rate of over 150%. And we have no intention of slowing down, as evidenced by the announcement we just made. I'm particularly pleased to discuss in greater detail our expansion into Wyoming. With this acquisition, our geographic footprint is expanded, and it's the next step to meet our growth targets. We announced definitive agreements for 2 sites just outside of Cheyenne, Wyoming. The first site will provide 45 megawatts, and the second site will provide 30 megawatts. Upon completion, this is expected to support a total of approximately 4.2 exahash per second. We will promptly break ground on infrastructure with the target of having the sites operational in the second half of 2024. In addition to the megawatts already in place, we are working with the utility on a load study that is already underway that we believe will allow us to expand the sites by an additional 55 megawatts for a total of 130 megawatts and an expected 7.4 exahash per second of operational hash rate in Wyoming. Our approach to acquiring rack space and deploying machines is meticulous and strategic. The upcoming expansion in Wyoming exemplifies our ability to identify and capitalize on opportunities that meet our stringent criteria for efficiency and scalability. Once we close the Wyoming deal, assuming we obtain the megawatts under the expansion, we expect our capacity under management to be over 550 megawatts. This new low-cost capacity will continue to support our mission to have a portfolio that ranks amongst the lowest average cost of energy in the entire industry. We have a solid track record of buying quality sites and then expanding them, and expect Wyoming to be no different. For example, Washington, Sandersville, and Dalton are the most recent examples of successful expansion, and we plan to do the same with Wyoming. Before transitioning to how we see the next few quarters developing, I'd like to provide an update on Sandersville. As you are aware, the facility is operating at 180 of the 230 megawatts that we expected. The utility's 50-megawatt transformer has not yet passed the required test before it can be shipped to the newly built substation next to our operations. While we do not have a specific time estimate for energization, the City of Sandersville is working in earnest to ensure the work needed is completed as promptly as possible, and we will share more updates as soon as we receive them. As we look ahead, the dynamics within the Bitcoin mining industry are shifting. We anticipate significant consolidation in the coming years, a trend that will likely widen the performance gap between the top-tier miners and the rest of the field. This shift isn't only about scale. It's about strategic positioning and operational efficiency, which are areas where CleanSpark continues to excel. The ongoing consolidation in our industry is necessary. It's akin to a market bloodletting. While this process won't occur overnight, it's an inevitable step towards a more mature and economically sustainable sector. As less equipped miners struggle to keep pace, well-positioned companies like ours will thrive. At CleanSpark, we favor growth through targeted acquisitions over mergers. Our approach allows us to integrate operations seamlessly and leveraging our existing efficiencies. A prime example of this strategy is our recent acquisition in Wyoming, which not only expanded our operational footprint, but did so under favorable economic terms, reflecting our commitment to smart growth. Our M&A strategy, the CleanSpark way, is rigorous. We review dozens of opportunities, but choose only those that meet our strict criteria. Efficiency, valuation, power accessibility, and community engagement. Allow me to spend a moment addressing each of them. Efficiency. Our operations are designed to maximize output, with our watts producing in some cases as much as twice the Bitcoin as some competitors. Valuation. We pursue acquisitions that offer substantial value, not just on paper, but in real operational terms. Power accessibility. Access to current and future low-cost power resources is crucial, ensuring sustainability and scalability. Community engagement. We prioritize acquisitions that allow us to maintain and enhance relationships within local communities, allowing our growth with broader social values. With that in mind, we are reaffirming our path to 50 exahash per second in 2025 and continue to target 32 exahash per second coming online by the end of this year. We expect to reach those goals through the acquisition of facilities that we can then put our machines in. I'd like to conclude by thanking our teams for their incredible work over the quarter. I believe our team set records for the fastest deployment time in our industry at Sandersville, racking and energizing machines with an expediency that showed the type of grit and resiliency that has become central to our culture. In line with that grit and resolve, I'm especially pleased to welcome two key colleagues to the executive management team. As announced yesterday, we promoted Scott Garrison to Chief Operations Officer and Taylor Monig to Chief Technology Officer. Scott and Taylor are examples of CleanSpark's commitment to excellence and the CleanSpark way. Their leadership and grit have been instrumental in positioning CleanSpark as a top operator at scale in the industry. I speak often about our best-in-class teams, and Scott and Taylor have both helped build and lead these teams to great heights. They are instrumental in our continued success as our teams grow and gain even greater expertise to match the task ahead of us on our path to 50 exahashes and beyond. I greatly look forward to this next phase in CleanSpark's journey as we work together to continue delivering value to our shareholders and the greater Bitcoin ecosystem. With that, I'd now like to turn the time over to Gary to review the quarter's financial results in greater detail.
Thank you, Zach. Hopefully, you have all seen our press release and Form 10-Q released early this morning. I'm happy to review our record results for the fiscal second quarter, which is a direct result of our thoughtful strategy and the grit and execution of our many team members. For the second quarter, we recognized $111.8 million of revenue, an increase of 163% over the same quarter last year. Compared to the preceding first quarter, we saw revenues increase 52%, or $38 million. These increases in revenue were not only driven by increases in Bitcoin prices, but also increases in our hash rate, which yielded increased Bitcoin production. To give you context, at the end of Q2 last year, we had almost 68,000 machines in operation, representing 6.7 exahash. At the end of Q2 this year, we had approximately 134,000 machines deployed, representing 16.4 exahash. The average revenue per Bitcoin more than doubled between the year-over-year periods, as our Q2 2023 average revenue was approximately $23,000, and this quarter our average was $55,000. When compared to our immediately preceding first quarter, our hash rate increased over 60%, from 10.1 exahash to 16.7. Our revenue per Bitcoin in Q2 increased over 50% to $55,000, as our revenue per Bitcoin in Q1 was almost $37,000. CleanSpark's mining economics remained healthy through the second quarter, as we saw gross profit improve 21 points over the same quarter last year and 8 points over the first quarter. Our market-based approach to power has helped with our margins, as we saw wholesale power costs as low as 1.3 cents per kilowatt hour in the second quarter. For our wholly owned locations, our all-in costs for the second quarter were a favorable 4.3 cents per kilowatt hour. This all-in cost represents wholesale cost of energy plus transmission and delivery costs plus the margins and taxes, sales taxes, to the utilities and communities we operate in. We did experience slightly higher hosting fees of 7.5 cents per kilowatt hour at our co-location. But it's important to note that this agreement includes a profit share, which is due to the rise in Bitcoin price, which drove most of this cost. However, our co-location is less than 10% of our total operating hash rate and 12% of our total megawatts operational. This further underscores the importance of our infrastructure-first strategy, where we want to own and operate our own facilities. The company posted record net income of $126.7 million, or 59 cents earnings per share, compared to a net loss of $18.5 million, or a loss of 23 cents per share in the same quarter last year. Our net income in the first quarter was approximately $26 million, or 14 cents earnings per share, which is an improvement of over $100 million, or 45 cents per share between the two quarters. I want to point out that the company early adopted fair value accounting for Bitcoin in Q1 of this year, which marks the company's Bitcoin holdings to the fair value as of the balance sheet date. In the second quarter, we recognized a gain on fair value of almost $120 million. While this amount is unrealized and non-cash, I want to call out our HODL strategy. We saw our total Bitcoin holdings grow by over 2,000 Bitcoin in the second quarter alone, as we kept nearly 100% of our Bitcoin production for the period. Since we can produce Bitcoin at prices lower than it can be bought on the spot market, we see our HODL strategy as another strategic move in acquiring assets which will provide shareholders with accretive value, particularly in this bull market where we expect price appreciation. Our adjusted EBITDA for the second quarter was approximately $182 million, which is an improvement of 1.6x over the preceding first quarter. Included in the second quarter adjusted EBITDA was approximately $120 million related to the fair value adjustment, which when removed shows our mining operations contributed approximately $60 million to adjusted EBITDA and represents 50% cash adjusted EBITDA margins. Looking at specific line items on the income statement, our payroll expense did increase approximately $1.5 million, or 10% in the second quarter.
I'm going to have to switch over to the Marathon Digital call now. And so I've got a bunch of stuff in my ears right now. So Marathon Digital should be just starting in a minute. They've just got music going on. Sorry to cut you guys off from that, but I want to be sticking around for Marathon. And if you guys are joining because you want to be tuning into the Marathon Digital Holdings call, I just tuned into it. Should be starting at any second. I've got their music in my ear. And once it gets going, I will mute myself so we can just watch their chart. And I will probably switch this over from CleanSpark. Sorry if you guys were enjoying this, Now the focus will be on Marathon. And it did just get silent, so I'm going to mute myself so we can all listen. I hope you enjoy Mara's earnings call. Take care. I'll be here. Yeah.
I would now like to turn the call over to your host, Robert Samuels, Vice President of Investor Relations. Please go ahead.
Thank you, operator. Good afternoon, and welcome to Marathon Digital Holdings' first quarter 2024 earnings call. Thank you for joining us for our call today. With me on today's call are our Chairman and Chief Executive Officer, Fred Thiel, and our Chief Financial Officer, Salman Khan. Before we get started, I'd like to remind everyone that our prepared remarks may contain forward-looking statements, and that we may make additional forward-looking statements during the question and answer session. These forward-looking statements are subject to risks and uncertainties, and actual results may differ materially. When used in this call, the words anticipate, could, enable, estimate, intend, expect, believe, potential, will, should, project, and similar expressions as they relate to Marathon Digital Holdings are as such a forward-looking statement. Please refer to our earnings release for a full recitation of our forward-looking statements. Investors are cautioned that all forward-looking statements involve risks and uncertainties, which may cause actual results to differ materially from those anticipated by Marathon at this time. Some of these risks and uncertainties are more fully described in Marathon's public filings with the U.S. Securities and Exchange Commission, which can be viewed at www.sec.gov and ir.mara.com. Finally, please note that on today's call, we will refer to certain financial measures that were not prepared in accordance with generally accepted accounting principles in the United States, including adjusted EBITDA and non-GAAP total margin. Marathon believes these non-GAAP financial measures are important indicators of its operating performance because they exclude certain items that are unrelated to and may not be indicative of its GAAP financial results. Please refer to our company's periodic reports on Form 10-K and 10-Q and to our website for a full reconciliation of these non-GAAP performance measures to the most comparable GAAP financial measures. As usual, we'll begin today's call with prepared remarks from Fred and Salman. After their comments, we will be going through some of the more popular questions from investors before transferring to a live Q&A with our covering analysts. And with that out of the way, I'm going to turn the call over to Fred to kick things off. Fred?
Thank you, Rob. The first quarter of 2024 was one of our most transformative to date. We officially transitioned Marathon from being an asset-light Bitcoin miner and laid a solid foundation on which we are building this organization into a globally diversified company that leverages digital asset compute to build a more sustainable and inclusive future. During the quarter, we significantly grew and improved the resilience of our portfolio of digital asset compute by acquiring and integrating our first fully owned and operated Bitcoin mining sites. At the end of last year, our portfolio consisted of 584 megawatts of capacity, only 3% of which we directly owned and operated. In less than 4 months, we initiated, negotiated, closed, and integrated our first 2 acquisitions comprised of 3 sites. The first 2 being the sites in Granbury, Texas, and Kearney, Nebraska, and the second being the site in Garden City, Texas, that is adjacent to a wind farm. We purchased these assets for approximately $458,000 and $437,000 per megawatt, respectively, which is approximately half the cost of what some of our competitors have paid to build new sites. In Q1, we effectively doubled the size of our portfolio to 1.1 gigawatts of capacity, and we gained far more direct influence over our operations by taking direct ownership and operation control of 54% of the portfolio. We did this while generating significant savings for our shareholders relative to building sites the way our competitors have, and we quickly gained enough capacity to meet our near-term growth targets of 50 exahash by the end of this year. As we cost-effectively laid this path to accelerate our scale and enhance our operational influence, we also launched our first products and services as an organization, each of which demonstrates our commitment to expanding and diversifying revenues by creating advanced technologies that transform digital infrastructure and diversify our revenue streams. In February, we launched Slipstream, which is a direct Bitcoin transaction submission service that is designed to streamline confirmations of large or non-standard Bitcoin transactions. In essence, it provides sophisticated users with a simple, transparent, and trusted means of adding complex Bitcoin transactions to the blockchain, provided they adhere to Bitcoin's protocol, and it provides Marathon with an opportunity to increase revenue by capturing more transaction fees, which is particularly advantageous in a post-halving environment. Although the service is only a few months old, it has already proven valuable. Last month, just before the halving, we earned an additional 4.25 Bitcoin from Slipstream alone. Mara Pool, which powers Slipstream, captured one block with 10 Bitcoin in transaction fees and another with 16, generating nearly 10% greater fees than FPPS pools at the time. While these numbers are small relative to our overall production, Slipstream serves as a tangible example of the strategic importance of operating our own mining pool, of being at scale, and of deploying our proprietary technology stack. As a matter of fact, if you were to look at the mempool.space for the past week and look at mining pools, you would see that Marathon's pool performed 40% above average. As we demonstrated in March, Slipstream was just the beginning. During the first quarter, we also brought our first products to market, all of which contribute to one of our key competitive advantages, our vertically integrated tech stack, and provide us with an opportunity to diversify our revenue streams. These products include our industry-leading Mara firmware, controller board, and two-phase immersion technology, which we call 2PIC. We showcased each of these products at the Empower conference in March, and the reception was overwhelmingly positive. We already have paying customers for our firmware, and 2PIC has a pipeline that is in the tens of millions of dollars and growing. We're currently integrating 2PIC at some of our own sites, which is part of our strategy to optimize our performance by increasing uptime, improving efficiency, and reducing maintenance downtime and cost. For the market, our goal is to begin shipping these systems in volume to third parties by the end of this year. While the quarter was highlighted by the significant expansion of our portfolio of digital assets compute and the launch of our first products and services geared towards transforming digital infrastructure, our Bitcoin production was negatively impacted throughout the first quarter by unexpected equipment failures, predominantly transformers at our third-party hosted sites, utility company transmission line maintenance, and a higher than anticipated weather-related curtailment across multiple sites. However, I'm pleased to say that we have mitigated a number of these issues and are currently operating at a record high level of 27 exahashes. While there will always be the potential for exogenous events that impact operations, we believe we can mitigate their impact over time as we continue to scale, standardize equipment, diversify globally, and build redundancies, and leverage economies of scale that stem from owning and operating multiple sites around the world. In the meantime, we can always control how we respond to challenges, and just as we always have, our team quickly began working on solutions that were within our control. We were able to immediately take advantage of the newly available capacity from our recent strategic acquisitions. Once it became clear that the transformer issues at Ellendale were more complicated than originally believed, our team quickly began reallocating miners from this site to Garden City, where there was available capacity. We successfully moved 9,500 idle miners from Ellendale and simultaneously began energizing new machines to expand our capacity. Our ability to adapt, combined with the uptime improving across our sites, these challenges were resolved, enabled us to achieve an all-time high operating hash rate of 27 exahashes this month. The transformer issues that negatively impacted our ability to convert megawatts into terahash and therefore Bitcoin have been challenging, but with our hash rate continuing to grow to record levels, we have clearly been able to work through the challenges and to execute. And fortunately, the resilience we've built into our diversified portfolio, our ability to adapt to change and changing circumstances, and our HODL strategy allowed us to still capitalize on Bitcoin's positive momentum. Despite the operational challenges, we still produced record financial results during the first quarter. To unpack our financial results, I'm now going to turn the call over to Salman, who will cover the results in more detail. Salman?
Thank you, Fred, and welcome, Rob, to Team Mara. As Fred mentioned, our Bitcoin production was negatively impacted in the first quarter by transformer and other issues. Despite these challenges, the positive momentum in Bitcoin price, our strategy to increase our Bitcoin holdings over time, and our team's consistent ability to execute helped us drive a record financial results for the quarter. Let's dig into the details. We reported net income of $337 million, or $1.26 per diluted share in the quarter. This was a 184% increase from net income of $119 million, or 72 cents per diluted share in Q1 of last year. The increase in net income was primarily driven by favorable Bitcoin price, higher production, and fair market value of digital assets on our balance sheet. Revenues increased 223% to a record $165 million from $51 million in the first quarter of 2023. With the average price of Bitcoin mined being 126% higher this quarter than the year-ago period, the increase in revenue was primarily driven by a $77 million increase in the average price of Bitcoin mined. We produced an average of 30.9 Bitcoin each day during the quarter compared to 24.4 Bitcoin each day in the prior year period. These improvements in production also contributed approximately $10 million to our top line. As a result of closing the recent acquisitions, we are temporarily providing hosting services to existing hosted customers during the transition period. The revenue we generated from hosting revenues was $21 million, which was not present a year ago. We expect this revenue to taper off in the coming quarters as we work with current tenants of the sites on their transition plans and use that space for our own growth. Our hosting and energy costs were $71 million compared to $33 million last year. In both time periods, the increase was primarily due to growth in our mining fleet and related costs. In the first quarter of 2024, global hash rate or network difficulty levels continue to increase. Average global hash rate has increased by more than approximately 86% since Q1 of 2023. That combined with operational issues at our third-party hosted sites in Q1 of 2024 resulted in a higher cost per coin. Our non-GAAP cost of revenue without depreciation has improved 16% from 53.7 per petahash per day in Q1 of 2023 to 45.2 per petahash per day in Q1 of 2024. As we realize synergies from our recently announced acquisitions, re-energize production at our third-party hosted sites, and spread the fixed costs over larger 50 exahash capacity, we expect our marginal cost per coin to improve. Total cost of revenues, which includes depreciation and amortization, $168 million compared to $151 million of last year. Depreciation and amortization was $78 million, a $60 million increase from the same quarter in the prior year. The change was predominantly the result of growing our energized hash rate from 11 exahash to 27.8 exahash and recent acquisition of 2 sites in Texas and Nebraska. Our non-GAAP total margin, excluding depreciation and amortization, was $75 million this quarter compared to $18 million in the same quarter last year. The change was predominantly related to higher Bitcoin prices, increased production, and increased operational efficiency. General and administrative expenses, excluding stock-based compensation, were $21 million compared with $11 million in the prior year period. This increase in expenses was primarily due to the increasing scale of the business. Headcount grew from 30 employees at the end of Q1 last year to 60 employees at the end of Q1 this year, which subsequently has increased to over 100 employees. As we thoughtfully grow our company, we continue to opportunistically add talent across the organization. Part of our treasury management strategy involved selling enough of the Bitcoin we produced to cover operating expenses and then hodling the remainder on our balance sheet. By employing this strategy, we have essentially been dollar cost averaging into Bitcoin at a discount for the past several years. With our cost to produce a coin significantly lower than the Bitcoin price, the dollar average strategy generally has been even more accretive for our stockholders. With the new accounting rules that require the measurement of crypto assets at fair value, and with the Bitcoin's price appreciating nearly 150% from the end of Q1 last year to the end of Q1 this year, this strategy has proven very effective for us. In Q1 of this year, we increased our Bitcoin holdings 15% from 15,126 to 17,320 Bitcoin. Because of the significant amount of Bitcoin we hold on our balance sheet, we recognized a gain on digital assets of $489 million during the first quarter of 2024. Primarily due to this favorable value adjustment, our adjusted EBITDA increased 266% to $529 million from $145 million in the prior year period. A reminder that the fair value accounting reflects the changes in market value of Bitcoin that we hold on our balance sheet. In the current environment of Bitcoin price appreciation in recent quarters, we have continued to recognize gains through our income statement, reflecting the impact HODL's strategy has had on our financial statements. For example, every 10,000 change in Bitcoin price period over period can impact our adjusted EBITDA by approximately $170 to $200 million. Digging more into our Bitcoin holdings and cash position, unrestricted cash and cash equivalents totaled $324 million, up from $125 million a year ago. Also at March 31, we held approximately 17,320 Bitcoin with a fair value of $1.2 billion on the balance sheet. Combined, our balance of cash and Bitcoin was approximately $1.6 billion as of March 31, 2024. We sold 730 Bitcoin during Q1, realizing cash proceeds of $45 million. These proceeds were utilized to fund operating expenses, including cost of revenues for energy, hosting, and other cash operating expenses, and general and administrative expenses. During the quarter, we raised $489 million from at-the-market equity sales, which we primarily intended to use for miners, acquisition of infrastructure, and for other general corporate purposes. We expect our future Bitcoin holdings will generally increase, but will fluctuate depending on operating and market conditions. We intend to add to our Bitcoin holdings primarily through our production activities, and we will also continue to sell Bitcoin as a means of generating cash to fund monthly operating costs and general corporate purposes. As Fred mentioned, we have systematically deployed capital for accretive growth and strategic investments, which our teams have been able to integrate successfully in Q1 of this year. These acquisitions have not only been almost half the construction cost, but also have allowed us flexibility to move our miners from asset-light sites with operational issues, as discussed above. If we were to construct such sites on our own, it would have taken us more than a year to energize and likely cost twice the amount on a per megawatt basis, making these acquisitions highly accretive for our stockholders. The acquisition of sites in Granbury, Texas, and Kearney, Nebraska, have been accounted for as a business combination per FASB rules, and we have recognized the fair value of the assets acquired and liabilities assumed on our balance sheet. As a result, we also recognized goodwill of $30.9 million and intangible assets of $22 million, primarily related to customer relationships. We also accrued early termination expenses of $22 million as we terminated certain hosted customers subsequently. Another item worth highlighting is that Marathon was added to S&P Small Cap 600 Index. Just a reminder, the S&P Small Cap 600 tracks 600 U.S. companies with a market cap between $1 billion and $6.7 billion that have positive earnings over the most recent quarter and 4 quarters combined. We are proud to be the first Bitcoin miner added to the S&P Small Cap Index. This inclusion is a testament to the consistently improving financial performance of our organization as we have scaled and implemented effective strategies to capitalize on market conditions. And that completes my update. I'll now turn it back over to Fred, who will talk more about our future plans. Fred?
Thanks, Salman. Over the past year, we've evolved from outsourcing our operations to third-party hosting providers to owning and operating sites, developing and marketing technology products, and using waste and stranded power to generate energy and recycle heat. During Q1, we laid the foundation for Marathon to become a globally diversified company that leverages digital asset compute to build a more sustainable and inclusive future. And as we transition into the second quarter, we are reorganizing the internal structure of the business to better align with our growth opportunities, sharpen our strategic focus, bolster accountability, and maintain our speed and agility as we scale. Starting in the second quarter, Marathon will be restructured into a matrix organization consisting of 3 business units: utility scale mining, technological innovations, and energy harvesting, and supporting organizations such as Marcom, finance, etc. In my opening remarks, I spoke at length about the first 2 of these verticals. Utility scale mining is our large-scale global digital asset mining operations. This vertical is what Marathon is primarily known for today: large-scale digital asset compute that's geared towards enhancing grid stability and the security of the world's preeminent blockchain ledger. Our technology division is focused on creating advanced technologies that transform digital infrastructure. This group has already launched its first series of products, and going forward, its mission will be to deliver innovative hardware, software, and services that maximize energy efficiency, improve performance, and unlock new opportunities for those who operate at the edge and for those who are building the foundation of the digital future. In March at the Empower conference, we demonstrated how the combination of Mara firmware and 2PIC immersion enabled us to operate state-of-the-art digital asset miners at significantly higher performance levels with near minimal impact to energy efficiency. Using this solution enables digital asset miners to significantly increase the productivity of their digital mining assets, earn a higher return on the compute investment dollars, and reduce the total cost of operating sites. Our third vertical, which I did not discuss in my opening remarks, is energy harvesting. The mission of energy harvesting is to support the energy transformation by converting environmentally harmful waste energy, stranded clean energy, or otherwise underutilized sources of energy into economic value. For now, it's perhaps easiest to think of this as the next evolution of Bitcoin mining, involving leveraging digital asset compute to convert waste into energy, sequester methane, and generate and reuse heat for industrial and commercial purposes. This last part is quite important, as nearly 50% of total energy use is used for heat, and a portion of that is low-grade heat, i.e. sub 50 degrees Celsius, that can be provided by heat harvested from our digital asset compute systems. This includes applications such as preheating materials in industrial processes, heating buildings and water for communities, and food production applications such as greenhouses and shrimp farms. We created these business units in response to the opportunities we saw in the market and how we believe this industry will evolve. As you all know, the industry just underwent a halving event, during which the block reward was reduced by 50%. As block rewards will continue to reduce by 50% every 4 years, it is critical to find new ways to leverage expertise and create value for others in order to maintain a position as a leader in the industry. And we believe that we can do so successfully, then we can not only mitigate the impact of halving events, but also excel. While utility scale mining is by far the most significant portion of our business today, we believe each of these businesses will contribute meaningfully to our organization over the coming years. Long term, our goal is for 50% of our revenues to come from non-utility scale mining. It will take time to reach that scale, but these new businesses are already showing progress. We already have a pipeline valued at tens of millions of dollars for our technology products. Our pilot project in Utah, where we're capturing methane from landfill to power Bitcoin miners, is our first energy harvesting project, and we expect to launch several others in the coming quarters. The demand for these verticals isn't just domestic, it's global, and we're chasing after it. In April, we announced that we appointed a new managing director to lead our expansion in Europe, Middle East, Africa, and parts of Asia. Since his appointment, our team has generated promising opportunities across the region, from Finland in the north to Kenya in the south. While Marathon is already operating on 3 continents, our plan is to continue scaling our international business over coming years, such that approximately 50% of our revenues come from overseas by 2028. In the more immediate term, we're doubling down on our utility scale mining business. We originally targeted to grow our operations to 35 or 37 exahash by the end of 2024 and 50 exahash by the end of 25. However, With the expansion capacity gained from our recent acquisitions and the 45 exahash of additional compute available to us between current orders and options, we're now targeting 50 exahash by the end of this year. We already have 12 exahash of new miners arriving in early Q3 to take advantage of our acquired and expanded capacity, with more coming to fill waiting capacity over the balance of this year. This represents a doubling of our compute capacity and further increases our energy efficiency in under 1 year and will strongly extend our position as the leader in our industry. While we will always be raising capital to continue growing our business, we currently have ample liquidity to fully fund the balance of our 50 exahash growth target this year. Q1 was a transformative quarter for Marathon, during which we battled against operational challenges to produce record financial results. We launched and began building the pipeline of our first products, and we doubled the size of our portfolio of digital asset compute. With 11 sites diversified across 3 continents and the road to 50 exahash clear ahead of us, we look forward to evolving into and excelling as a globally diversified company that leverages digital asset compute to build a more sustainable and inclusive future for all. And with that, I'll turn it back to Rob for Q&A. Rob?
Thanks, Fred. At this time, we are going to commence the Q&A section of today's call. We'll start by answering some of the most popular questions submitted by investors through our Q&A platform. So our first question comes from Alexander Rem, who asks, post-halving, in what ways is Mara in a better position to stay profitable and grow compared to other mining companies? Fred, you want to take that one?
Sure. So a number of things. By acquiring sites and vertically integrating, we lower our cost structure. So essentially taking out the middleman who was the third-party hosting operator and taking out their margin, which in some cases can lower our cost by as much as 20%. Additionally, the diversification of our revenue streams, technologies such as Slipstream, which enhance our ability to earn transaction fees over and above what normal FPPS pools earn, provide us with abilities to, in a lower Bitcoin block subsidy world, such as post-halving, generate generally greater revenues on a per block basis. So we believe we're very well positioned with our diversified revenue streams that we'll be developing over the coming years to be positioned to take advantage of whatever the market brings to us in the near and long term.
Thanks. Our next question, and we have a couple questions related to M&A, but Parminder S. asks, is Mara looking for a merger or planning to buy out other miners in the short term? Fred, you want to take that one as well?
Well, we've already shown that we're acquiring hosting companies and the sites for capacity. Now, to date, these have been mostly sites where we have miners installed currently, so it's a very easy integration. The challenge with integrating and acquiring miners that have their own fleets of miners is the age of miners that they have in their fleets. Most companies today are still transitioning to the latest state-of-the-art S21 class of machines and maybe running S19J Pros or even XPs. The challenge is, if we were to acquire a miner today and attribute any value to their fleet of existing machines, especially if their machines were S19J Pro or older, that wouldn't be a very smart idea. So essentially, as we acquire miners, you'll tend to find that pricing will be very focused on the infrastructure value as opposed to the miners that are installed, unless, of course, they have state-of-the-art miners installed, at which point you can value them at their replacement cost. But I think typically most publicly traded miners have valuations which exceed essentially the cost to rebuild that infrastructure, and it comes down to a question of time to revenues. And what is it worth for you to acquire a miner that has capacity running and miners installed versus building it yourself, and how much extra do you want to pay for that time to market?
Thanks, Fred. Our next question comes from Rojan Yu, who asks, what's the status of your open ATM? And do you think this is the reason that Mara has not been tracking the price of Bitcoin? Salman, I think this one's for you.
Thank you for asking the question, Rojan. In Q1, there was a general rotation out of miners and into the recently launched ETFs. We believe the top performing miners will see price appreciation as the investors see the results. Similar to other industries like oil and gold, ETFs have their own position in the value chain, while oil and gold companies create value for their stockholders and generally track the commodity price with premium on top of the commodity price. In terms of the ATM, as of March 31, 2024, we had not accessed the new ATM, and subsequently we raised about $200 million. As a reminder, the ATM gives us low cost of capital to invest in accretive acquisitions or grow the company as we continue to use Bitcoin to fund our operating costs in G&A.
Thanks, Salman. I think the next one is for you as well. Orlando C asks, what's your current break even for Bitcoin? You want to take that one?
Great question, Orlando. There seems to be a lot of diversity in the industry in terms of how the companies report their costs and where is it parked and all that stuff. So it's a difficult question to answer in terms of the apples to apples comparison. So with that in mind, you could look at multiple ways. One is marginal cost of revenue without depreciation, which is cost of revenue minus depreciation non-cash items. And that's one way of doing it. The other way of doing it is to look at cost per hash, which we believe is a better representation in this industry. So cost per petahash, as we talked about previously in our prepared remarks, we have improved about 16%. And as we fully integrate these recently announced acquisitions, as Fred had mentioned, some of those acquisitions can save up to 20% on our costs. All these costs will continue to show up in the future quarters as these synergies kick in and we integrate these acquisitions completely. As a reminder, our mining fleet remains the industry's one of the most efficient, which will even get better and more efficient as we progress with time and we hit the 50 exahash towards the end of the year. And that larger scale of exahash, it will allow us to spread the fixed cost across the larger pool, which on a unit basis will make us even more efficient. Moreover, just a quick reminder, our G&A per hash or coin remains one of the lowest in the sector, and that shows how efficiently the company has operated historically.
Thanks, Salman. Our next question comes from Tariq P, who asks, what are your plans for increasing efficiency and reducing the recent downtime at several Bitcoin mining facilities? Fred?
Yeah, great question, Tariq. So if you think about what happened in Q1, as I mentioned in my prior remarks, we had transformer issues at third-party hosted sites, and we had a utility line maintenance that was done that shut down one of our sites for a short period of time, and then we had weather events. All of these are exogenous factors. If you think about when you own and operate sites, you look to do things like standardize equipment across sites, so you have standard operating procedures. You also have spare parts for everything you're doing. One of the challenges with the Ellendale site were transformer issues, where some of the transformers that were installed could not operate at their stated spec. And so as those transformers started to fail, they had to be replaced and or modified. And had we built that site, we most probably would not have used Chinese transformers, but rather transformers of higher quality that would operate within spec. So again, over time, as more and more of the sites that we operate at come under our own control, I think we'll see uptime continue to tick up and we'll see performance improve. When you think about just operating efficiencies, again, stripping out the third-party hosting provider dramatically impacts your cost because you're stripping out somebody's built-in margin. And we also begin deploying our immersion technology. The two-pick immersion technology does a number of things. For one thing, it increases the essentially the lifespan of miners, because these miners that traditionally would be air-cooled in many sites essentially have to be serviced every 30 days. They have to be cleaned, filters have to be changed, fans have to be replaced, and the mechanical load at the sites is higher. Using two-phase immersion, you don't have a lot of those issues. We have immersion systems that have run for months without having to be serviced at all. And so that reduces the overhead at the site, which reduces your operating costs, makes you more efficient, increases uptime. And the other advantage with toothpick immersion is that you become fairly immune from heat waves, because at the end of the day, the liquid in this tank is boiling, which means that it's likely to be hotter in the tank than the ambient temperature would be. So that makes heat much less of an issue, especially in places like Texas and in UAE, for example. And if you look at our site in UAE, that site operates with 99.8% uptime. And this is in an environment where the ambient temperature is over 100 degrees and humidity is, well into the 90% range. So I think that's a great example of how our sites operate more efficiently and more effectively when they're under our control.
Thanks, Fred. In the interest of time, I think we'll have to wrap up this section of the Q&A. And again, we really appreciate the questions and interest. I'm now going to turn the call back to our operator to open the line to questions from our covering analysts. Alicia, back to you.
Thank you. We'll now be conducting a question-and-answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we pull for questions. Thank you. Our first question comes from the line of Lucas Pipes with B. Riley Securities. Please proceed with your question.
Thank you very much, operator. Good afternoon, everyone. Fred, my first question is on the pool performance you mentioned. I think you said 44% better. To what extent was this chance versus you being able to pick off kind of above average rewards? Thank you very much for that.
Yeah, so over the past week period, which that number comes from, it's about 40-point-something%. Not 44%, but there were certain transactions that had very high fees. And, at the end of the day, you have to win the block to get paid the transactions. But what Slipstream enables us to do is essentially generate additional fees on top of the standard fees that the pool otherwise would earn. And so even if you look over longer periods of time, whether it's, October through May, October of last year through May, Mara Pool has performed amongst the top pools from an average fee structure. A way to look at it is if you were to optimally fill a block with the highest value transactions, that would be an index of 0. And then how does a pool perform against that with blocks? And most of the FPPS pools operate at a -1 to 2, sometimes 3% below the optimum, where Mara Pool together with Slipstream has been performing above that. And for the period, really for the early part of this year to date, it's been almost 6-7%, and sometimes higher than FPPS pools that it competes against. So this is an advantage that over time may decline as more people start trying to leverage the types of technologies that built into our pool. But this is the whole reason why having a vertically integrated tech stack is so important. It allows us to do things that you can't when you're just buying best-of-breed technologies and putting it together. An analogy some people use when describing what we're doing is it's kind of the difference between the PC industry and the Apple ecosystem. Apple is all vertically integrated from their own chips through their own software, their own cloud services, et cetera. Whereas the rest of the industry uses microprocessors from one vendor, operating system from another vendor, graphics, et cetera, from other vendors. So we believe a very tightly integrated tech stack allows you to operate large-scale digital asset compute in a much more efficient and optimized manner than just buying third-party services and leveraging third-party pools.
I appreciate that. Thank you, Fred. And from a modeling perspective, would it be too early to guide on an additional revenue on that, or would you point it out?
I think you could definitely work with Rob to look at the data, and you can actually just see this in mempool.space. You can just run reports for different periods of time, and you can see how our pool fees have averaged compared to others. But I think that over time, 2-3% would be a conservative estimate to use for modeling purposes, and then there'll be times where it's higher, and there may be times where we operate at the same as FPS pools. But 2-3% on average should be fine, which over time becomes quite a large number.
Mm-hmm. Thank you, Fred. And turning quickly to M&A, I know this has come up before, but where are you spending your energies right now? And are there kind of more opportunities like the ones you've executed on recently in front of you? Would appreciate your thoughts on that. Sure.
So, with the acquisitions we've already done, we have capacity to get to our 50 exahash goal by the end of this year. And we obviously have the miners inbound to fill that available capacity. So as we look at acquisitions going forward, we believe that, as I've said before, there's a mix of kind of third-party hosting sites that may be attractive. There's a mix potentially of sites where somebody has tied up power but hasn't fully built out the infrastructure. And then there are true greenfield where you're out talking to energy companies, solar project developers, wind project developers, and trying to negotiate power deals and then having to build infrastructure from the ground up. So we're looking across all three of those buckets pretty equally. Mm-hmm. We believe that this period post-halving now is going to be quite rich when it comes to M&A opportunities. And we believe that there'll be some great opportunities to acquire more capacity. We don't think that there will be a shortage of compute. We look at pricing in the marketplace, and what we're seeing is more efficient rigs coming to market at essentially the same prices as they are now. And we don't see an additional buying wave now post-halving of compute. So we think that that market will likely remain fairly stable with relatively easy access to be able to buy more rigs. And we continue to think that capacity, in other words, sites are the kind of the shortage, and there's a lead time if you're going to build sites also. So we think that as we look towards 2025 expansion, because obviously we're not going to stop at 50 exahash, and we look at 26, 27, and towards the halving in 28, we think that companies like Marathon, where you have very large scale, utility scale mining, if you would, combined with energy harvesting and technology sales, provides you with a really robust and resilient business where you can weather ups and downs, and then also get the leverage of being able to continually operate a little bit better than everybody else. That's the goal. Be the most efficient, most optimized operator out there.
This is helpful. I want to turn it over, Fred, to you and the team. Best of luck.
Thanks.
Thank you. Our next question comes from the line of Joe Flynn with Compass Point Research. Please proceed with your question.
Hi, guys. Thanks for the question. I had a question regarding the Generate Capital acquisitions. I was, wondering how many megawatts of, capacity is currently hosted by legacy customers. And if you could provide more color on ultimately the timelines of that freeing up that capacity and transitioning it to self-mining, that would be helpful.
Yeah, so it was about 390 megawatts of total capacity, of which we already had somewhere around 180-ish megawatts that we were using. There's about 75 or 80 megawatts which will be vacated by the end of June, and then the balance we think shortly thereafter. So we think we'll have 100% utilization of that site for our own miners in Q3.
Great. And then follow up on kind of the power costs. Like hash costs look to be impacted just just due to the the uptime. But just going forward, how should we think about maybe just power costs from a cost per kilowatt hour basis, and ultimately how owning your own infrastructure can layer in to lower those costs, and how much improvement can we see in kind of the second half as you install more efficient machines?
Sure. So if you look at the sites in Texas where we can take advantage of a variety of programs to monetize energy, when we were using sites that were operated by a third party, we didn't get the benefit of economic curtailment and power trading, which is something we now have the benefit of. And we have actually reaped some, very material gains already in the first quarter from some of that activity. But that's very opportunistic. It depends on, temperature spikes, things that happen in the market that allow you to really benefit from that. The big difference, with owning sites versus using third-party sites is you strip out this kind of upwards of 2 cents a kilowatt hour that the hosting provider was charging you, which was their way of covering their infrastructure costs, their operating costs, et cetera. We believe we can operate sites that we own for somewhere between half a cent and 1 cent per kilowatt hour. It kind of depends on the where and what type of technology. The more immersion technology we have, the lower the cost to operate the site, as an example. When it comes to power prices, there's some wide ranges, from PPAs that are in the sub 3 cent range to things that run upwards of 4 cents. So somewhere in that range across the different sites. But the key savings from the shift from asset light to owned and operated is stripping out that margin of the third-party hosted provider. So, you can imagine, 1 to 1.5 cents a kilowatt hour reduction in your cost to mine is pretty significant.
Great, thanks. That's all for me.
Thank you. Our next question comes from the line of Kevin Dede with H.C. Renwright. Please proceed with your question.
Good afternoon, Fred, Salman. Thanks for having me on. Could you, Fred, maybe peel the onion back a little bit on power? I know you moved some rigs from Ellendale. Could you give us your thinking on when you might be able to move rigs back, and how you plan on building or filling out? I think you have available capacity at the old Generate Capital sites. Just give us some feeling for where you're going with power and how you'll be able to support 50 exahash this year.
So let me see if I understood your question properly. So from a capacity perspective, we'll be filling out a lot of the existing capacity over Q3 and a little bit into Q4 as well. As I said earlier to somebody's prior question, we should be seeing most of the hosted customers vacated. The majority of the capacity really by end of this quarter and bleeding into a little bit into Q3. And we have a whole slew of miners coming in to plug in that are all state-of-the-art S21 class machines. But in the case of Ellendale, power has, we've been able to bring the site back up partially. Right now, it's operating at about 60-65% of its max capacity, and each week a little bit more comes online as transformer fixes are made by Applied on that site. And so far, we've been ahead of schedule there. So we have miners ready to go to plug in there. We moved 9,500 miners from Ellendale to Garden City just as a way to, we had the capacity. It was easy to make the move for the miners, and so it made sense to do that. As Ellendale continues to come back online, we have machines ready to go to plug in to take up those empty slots. So, no change in power cost, if that's what you were asking for in regards to power, or if that was more related to energization.
Yeah.
But essentially, the only site that we're really seeing a challenge at from an energization perspective is just what's left to do at Ellendale. But that's progressing on a weekly basis, as I mentioned, and that'll be all back up, over the balance of the next coming months.
Well, the subtext of the question, Fred, apologies for not making it clear, was I thought that the two sites that came with Generate Capital offered you flexibility in adding capacity, power capacity. Mm-hmm. I was just wondering how you were thinking about that and whether or not you thought you might need it this year to reach 50.
No, we don't need to expand capacity at any sites. The capacity that we have that is energizable, if you would, so no need for additional expansion, covers us to 50 exahash. So anything at the Generate sites that would be an increase in site capacity would be additive. And think of that as more a 2025 growth target.
One more, if you let me, Fred. Could you
Sure.
add a little color, please, to your energy harvesting theme and your heat reuse theme? You mentioned a couple of things on calls, but not a ton of detail.
Yeah. So again, energy harvesting is taking essentially wasted or stranded energy. And that can come in multiple forms, right? It can come in the form of methane coming off of landfills, and we've talked about the pilots that we have running in Utah in that regard. You can also capture methane flare gas from oil fields, for example, and there is methane coming out of a variety of agricultural processes. Obviously, dairy farming generates a lot of manure. You can take a lot of these things, such as bio-waste. Think of food processing plant, essentially the waste that comes out of that, the stuff that comes out of ethanol and methanol manufacturing, which is all agricultural product base. You can take those base products and through anaerobic digesters generate electricity with them. You then use Bitcoin miners to consume that electricity, and then the heat generated by the miners can be fed back into the industrial process. So in the case of ethanol and methanol manufacturing, you need to preheat the biomass that you're using to make ethanol. In alcohol, for example, manufacturing, spirits, beer, etc. You have to do similar things for the fermentation mass. And in the case of agriculture, you'll find there's a lot of bio-waste that can be used, and then you can generate heat and feed that back into things like greenhouses or shrimp farms, etc. So heat reuse is very important. You also have the simple use case of just heating buildings. You can take electricity that normally is going to power a boiler, and you can replace that boiler with our 2-pick technology with miners in it, and you can generate hot water just the same. Same amount of energy generates same type of water at similar cost. And so if for the building owner, if it's cost neutral to them or even a cost savings to them to deploy our solution versus traditional boilers or heating, or even more importantly, if they're transitioning to electric heat from natural gas or oil as part of the energy transition, then they can get the benefit of having potential cost savings, and we essentially get a situation where our cost to mine Bitcoin is free. And long term, the benefit of energy harvesting is that the processing of the waste material and the sale of the heat back into an industrial process should hopefully mitigate 100% of your energy cost. And so the mining of Bitcoin is done for free. Now, granted, these are smaller scale sites, but some of these sites potentially are 5 to 20 megawatts in size. And you have the additional benefit that eventually, if transmission lines were available, you could just sell the electricity you're generating. So we believe that as a way to diversify our business, lower our costs, decentralize the mining of Bitcoin, and this is an important factor because with the halving, you're going to see more and more concentration of Bitcoin mining amongst the big miners. It's very important that you start to develop this long tail of Bitcoin mining that I've talked about, where you essentially have hundreds of thousands, if not millions of things out there that are leveraging energy to mine Bitcoin, all to secure the Bitcoin blockchain and process transactions. Because over time, large utility scale miners will eventually come into a place where you can't get energy at utility scale at a lower cost than its cost to produce in those cases. And if Bitcoin price trends upward, but not at a accelerated pace, then over the next 4 to 8 years, potentially utility scale mining will become potentially a more challenging business. And so the combination of technology, the combination of using alternative energy sources, all these things become really important to optimizing your operations. And our goal is to remain one of the lowest cost operators when we get to the next halving and be positioned to really continue to lead the industry well beyond the point where the block subsidies are the primary driver of revenues for Bitcoin miners.
Thank you. Our next question comes from the line of John Tordero with Needham & Company. Please proceed with your question.
Great, thanks for taking my question here. I guess if you could just kind of remind us through the cadence of getting to 50 exahash by the end of 24. And then second question, do you anticipate G&A to kind of stay mostly flat from here? It sounded like there was still some hires you needed to do, but just wondering if we could drill into that a bit more.
So I'll let Salman answer the G&A question, but relative to the cadence of deployment, as I said before, capacity at the sites starts freeing up really at the end of this quarter and the early part of Q3. We have a large number of miners inbound to fill that capacity, and then the balance of capacity growth will happen over the latter part of Q3 and into Q4 as we continue to get Ellendale back online fully and fill out the little nooks and crannies of capacity that exist out there. We're at the same time also upgrading some of the sites that we acquired from air to immersion and doing things which will increase efficiencies and increase uptime. And this is all before we start talking about the benefits of two-pick immersion and what it can do from an overclock perspective with minimal impacts to efficiency. So I think longer term, these types of technologies are going to become really important, because if you can overclock S21s to the tune of 50 or 60%, and you can do it with a de minimis loss of efficiency, then you can save a lot of CapEx. Plus have the flexibility to overclock, underclock, all depending on energy cost and Bitcoin price. It gives you a lot more flexibility and potentially saves a lot of capital. So we're very excited about kind of the impact of that on the longer term, especially as we grow well beyond 50 exahash at the end of this year.
On the G&A, if you think about it from a cash G&A standpoint, excluding stock compensation, which is a non-cash item, we expect it to be flattish on a quarter-over-quarter basis going forward from here. It's a quick reminder that on a unit basis, we continue to improve from here as we deploy more exahash in the company and spread that across the larger exahash pool.
Got it. Thanks, guys. Appreciate it.
Thank you.
Thank you. Our next question comes from the line of Joe Flynn with Compass Point Research. Please proceed with your question.
Hi, guys. I had a question. I was wondering what the progress is on Auradine. And also, Brad, when you talk about having the latest and greatest S21, are you referring to 17.5 joules per terahash, or the most recent Pro version where it's 15 joules per terahash? Thanks.
Yeah, so on Auradine, I'm not going to comment specifically on all the company's achievements, because I'll let the management team do that. But what I will say is, we are in the process of, we'll be deploying Auradine in our two-phase immersion tanks. We'll have essentially the ability to put almost 800 kilowatts of mining capacity in a 8-foot container, which is a huge power density factor. And you can essentially take what is today if you look at our UAE sites, we have essentially each 40-foot container is about 1 megawatt. Well, we can retrofit that container to dual phase immersion and end up with 3.2 megawatts in that same form factor at fairly low cost for the upgrade. Same miners, just more of them, and the ability to consume more power if more power is available. So we believe that that's going to be a big differentiator going forward. The advantage with Auradine miners for us is a lot of the intelligence that's built into them regarding fleet management. And like any fabless semiconductor company, Auradine is building wafer capacity with their vendors and continue to grow supply. And we'll continue to buy product from them as the supply chain increases. In regards to the Bitmain question, there's a mix of pros and the 17 joules per terahash. The immersion version of the 21 does not come in a pro version, but the immersion version operates more efficiently than the air version, so kind of mitigates the two. Hopefully that answers your question.
Yeah, appreciate the color. Thanks.
Thank you. There are no further questions. I'm going to turn the call back over to Rob Samuels for closing remarks.
Thank you all for your time today. If you have any questions that were not answered during today's call, please feel free to contact our investor relations team at ir@mara.com. And thank you. Enjoy the rest of your day.
This concludes today's teleconference. You may disconnect your lines at this time.
Hopefully that was enjoyable. Hopefully you learned a lot. Nice having the discussion in the live chat. But yeah, we'll see where Marathon Digital goes and where CleanSpark goes. It's kind of like they've gone in opposite directions. And I don't necessarily think this is going to happen, but I was just doodling and thinking, well, maybe this is a head and shoulders pattern. And if so, the measurement from the top of the head here to the neckline transferred over to where the neckline was broken would be bringing price down to right around this 236 level. So we can take a step back, look on the daily time frame. And so that is based on this. And so that's not too extreme. Might be coming down to 1866. But that could also be completely wrong because it's a pretty ugly pattern. It's just like this right shoulder is really ugly. And I drew this line here because it's like, well, both of those shoulders are, lower than the top of the head at this angle. But I feel like that's just a doodle. But it is having a tough time getting above 1950 or 1951, this red line. But yeah. CleanSpark, I'll flip over to that. I'm probably not going to stick around too much longer just because I've streamed I've been on camera for more than 6 hours today. So, and I don't know if I'll put out another video today. I might do a short on Blink, but for me, when I'm wrong in some analysis, I feel like it's good for me to take a break from the chart and re-examine it and then come back to it. And I always get requests to go over Blink, so I'm always spending too much time on it, and I think I'm just wrong. So I think I need a break from it, really. But yeah, CleanSpark, this looks like it could be a bull flag still. Break from that, consolidating. But it would be nice to see it getting above 1712, that high from the pre-market. Let's see. Anyone ever exercise their contracts? As far as buying calls and then buying and then transferring them into 100 shares, I've never done that. Did they actually talk about shrimp farming? Yes, they did. I think related to gases that are produced. I don't know if shrimp farming, because what you're going to have with shrimp is they're going to be, clustered in little pools, and then all of their excrement is just going to build up as organic material that's going to respire, and that's either going to create CO2, methane, whatever gases are going to come from that, and then they harness that for energy to mine Bitcoin. And so, Marvin, no problem. It's always fun to do the streams. So take care. Good night then. Midnight, crazy. Yeah, and happy Friday. Enjoy the Friday. And so, tomorrow is, I hope it's for you guys, your Friday. Tomorrow is my Monday. I'm working the next 3 days, 12-hour shifts. But then I get Monday and Tuesday off next week, and then next Friday through Sunday I'm off. It's kind of a weird schedule, but I end up getting paid double time on Sunday, time and a half on Saturday, so it works out pretty well. Who should go on media training? As far as, that's one thing that I find pretty crazy about a lot of earnings calls is that you'll hear, I don't know if it was for CleanSpark or if it was for Sundial, because I've done so many today, but you'd hear the typing from somebody. It's like, dude, mute your mic. You're, lots of money's on the line and you're typing away, not paying attention to the call. And with Mara, it seems like maybe they've gotten, I'm not the best at paying attention to earnings calls. I did a better job with CleanSpark and Mara than I did with the two earlier today. There's just so much going on with the charts and the chat and stuff and managing everything. But I feel like Mara has maybe gotten so big that they've got their hands in a lot of different things, whereas maybe CleanSpark's a little more condensed, focused. But I think that for both of them, I feel like, Bitcoin's going to be getting in the six figures this year, I imagine. So I imagine that the miners will be performing well unless, they screw up things on the business side. And that's kind of, one of the downsides of miners is it's not just the fundamentals of Bitcoin. It's also the business decisions that they're making because, it's like if everybody likes pizza, you start a pizza business, you could theoretically be making lots of money because everybody likes pizza, but you could hire bad employees, you could get behind on your payments, you could not have good service, you could use bad ingredients, stuff like that. And so just because Bitcoin or because pizza is doing well doesn't mean the miner or the restaurant will be doing well. So I am going to be signing off. I am, let's see. Because it's been a long day and I need to enjoy a little bit of sunshine before I spend the next few days inside. I hope you guys did enjoy this, and I hope it was useful. And if you did, make sure you like the video, the stream, and subscribe to the channel. I try to do earnings calls whenever they're relevant to the channel, and I also do Ticker Request Live every Sunday at 9 p.m. Eastern, taking requests live and going over the charts live, providing my perspective, and just having some discussion about the charts. And I do frequently do Bitcoin miners, and I probably will do them more frequently. I don't always do Bitcoin, and I've done Doge and Litecoin, but my calls are not always the best with them. My position with crypto in general is really just kind of, it's going to dip more than you think, so keep buying, and then it's going to rip more than you think. So it's a good investment. So I look forward to seeing what happens with Marathon and CleanSpark. I'll probably try to do another Bitcoin miner video on Mara, Riot, and CleanSpark at least. Maybe I'll get some of the other ones in there as well. But the multi-ticker videos tend to be kind of tough for me as far as editing goes. And so I'm not going to be able to do that this weekend just because of work, but I'll probably do it next week. And yeah, you're welcome. Thank you all for joining. I hope you all have a great Friday, great start to the weekend, and enjoy the weekend. And maybe I'll see you Sunday during a stream then. Otherwise, just, videos also on Twitter, Discord, and in the comments. So thank you all so much for being here. Take care and have a great start to